Trading Unlocked on November the 27th with a daily market Forex analysis for you. And before we get into this webinar, we just want to pull up our disclaimer real quick just to remind you that this webinar is for illustrative purposes, educational purposes only. And with that, we're going to go and jump to our live action screen here. And we're here at the www.forex-trading-unlocked.com workstation page. And we're going to toggle down. We first can take a look at this economic calendar. However, I can let you know that the calendar for today, except for having our numbers for the oil markets, there's really nothing left except for some numbers for Japan that come out still later on this afternoon, or this evening actually, which would be their morning actually. Let's see, then we have tomorrow GDP for the Swiss. We have a couple numbers on, but nothing really major in the European markets. So it's being pretty quiet on the numbers front for the rest of the week. As you can see, the euro US dollar here is starting to really pound support here. It's trying to take out this low right here. And if it does that, well, then obviously we know we will have had a lower move low, lower move high, and we're trying to make a new swing low, which would be bearish for the euro US dollar, at least in the short run, which would just reaffirm the trend, which right now is very bearish. The US dollar seems to be gaining some strength, trying to poke through resistance right now. Now, the funny thing is that this is an area where, not necessarily for the euro US dollar tends to find support around this area and a little bit lower. The US dollar Swiss, which we will look at soon, is also making new highs, trying to press parity. And then we have the US dollar yen also. Most of the currencies today, because of holiday markets, are actually kind of quiet. But this one right now is one of the ones that is pressing the fringe and trying to make a breakout to the downside. So let's put a little horizontal ray right here, and we'll put that on that low. So you can see how close we are. We are teetering on taking out that low and making a new one. So let's go to our US dollar CHF chart before we look at the pound. Now the euro US dollar, even though it's making these lows and pressing that, it's not that it's very extreme as far as the range. So it's moving, it's making trying to make a new swing low. Now this one here has made a new swing high. The US dollar Swiss, look at this, it's hovering just below parity. Now this is the thing. Now look at this. We've been in a nice uptrend, obviously neutral to bullish trend for the last month and a half. After we made this significant low right here, we made a lower move high, higher move low, higher move high, higher move low. Now we're making a higher move high, excuse me, which is definitely indicative of obviously bullish momentum and support. However, if you look at this chart overall over the past 3 months, it's really sideways between 98.5 and just above parity. So it's really caught in a $1.50 range right now, hitting that upper part of that resistance area. So the question is the dollar really that strong, or are we back at that pivotal point where the dollar is going to fall back off? Obviously, we'll see as the trading manifests over the next couple days. So we're going to look at the US dollar JPY as well. Reason we're doing that is because these are the ones that are pressing the moves today. This one here, as you can see, is trying to flirt with the breakout as well. So we have the euro US dollar that are hinging on new move lows, the US dollar yen, which is hinging on new move highs, meaning once again very strong dollar against two major currency crosses, the euro being one of the biggest. This here also supports the trend. We have a nice uptrend that this market has been going in since before September, and especially we have this current where we've been, looks more neutral, but no matter what, every time the market is broken down, it's swung higher. As you can see, here we had this major high, we had this major swing low, we made this high here, we made the swing low. This here, which is now our breakout area, swing high, here we have a swing low. So we'll use this as also our support line right here. Like only if the market was to retreat back below here, which I don't see that happening. Well, not definitely today, that's for sure. It could happen over the next couple days, but probably very unlikely today unless there's some major shocking news that comes out. Okay, so here we have our directional pivot level for the US dollar yen. And then we are also going to stick this up over here that we have our directional pivot level for the upside. So this is our upside breakout point right around 109,496. Is it going to hit there today? It's really tough. It's 10:20 Chicago time. Remember, U.S. markets shut down. It's a half-day market today and Friday. Obviously, they're closed on Thursday. Uh, the U.S. market is not all the market, but it is one of the biggest players. And when we shut down, it typically means that the other markets start to get thin volume. Doesn't mean they can't trend and make new highs or lows. Just be very careful. So if you're an aggressive bull right now and you're already in the trade, work it, keep it tight, but I wouldn't have too many expectations. Could it be an exacerbated move? Absolutely, there could be. Is it likely? No, probably not. So just be careful with your expectations and your trading over the next couple of days if you're trading out there who are obviously outside the U.S. And if you're in the U.S., I hope that you're winding your stuff down and getting ready to start your Thanksgiving break. And yeah, unless you really, really, really have to pay attention to something Friday or do something, I hope you're out and get to enjoy your holiday and have a safe one and just stay away from the markets because that would be one of the safest things you can do for yourself. All right, let's go to the British pound US dollar because we looked at the other European markets. This is one that's been ready for a breakout. However, it just has been hanging in limbo. Excuse me. And you can see that even the range trade has developed over the past week. Now remember, we do have a lot of we have a big poll coming up in the UK, and it turned out that the Scottish National Party, they call it the SNP, which is I believe now something like 30 something percent of Parliament is represented by them now. And they said that they've pretty much had enough. They know that there is not going to be a trade deal for Brexit next year. They're planning on it not happening. They're planning on Brexit happening, but they're planning on not having a trade deal. They said this has gone on long enough. Enough is enough. Just make the Brexit happen without the trade deal. That's what they will be pushing for. Not that some parts of the trade deal would not happen, or maybe this will be the screws that they need to press to some of the, I believe it would be the Tory party and some other, there's a lot of parties over there. You have to forgive me, I'm not that familiar with the different political parts that are in Parliament. So, but I guess that's what is the news that I've been able to get out of from different European venues and out of the UK. And it seems to be the consensus. And with that going on, I think that's why you have this really sideways trade going on here. So we're not even going to use, well, yeah, let's use array here. So this would be really our downside breakout right here. And then we would have this high here as our upside breakout. Now, I would use caution when it comes to this and leave that to the wind because with the fact that we were supposed to have done Brexit here and on October 31st, it didn't happen. And now with what's going on, look at these tight ranges here for the pound. This is abnormal. Not that these big days like this rally here are common every day, but the pound is known to have a wider range than most currencies on any given day, let alone have produced some nice moves. When it goes sideways like this is very rare. It's usually when it does this, it's basing before a rally or something like that when it's usually in the middle of this distinguishable trend. And obviously this is a distinguishable uptrend as of late over the past 4 months. But over the past month and a half, it's been sideways. So you've been caught in this range basically between 27.5 and 30 even, what are buck 30 even. So that is a nice area for, I guess, range traders to definitely capitalize on. But if you're a swing trader, you're trying to play the breakouts, you got slaughtered over the last month and a half. So that being said, I would use caution to then throw that to the wind before you start to really try and pick a designated move here with the pound US dollar, and take into account that you're probably going to have, after the US markets close today, some information that comes out in the UK politically that it will not impact the pound and the Brexit decision right away today when it comes out, but it is going to be supposedly the precedent for next year as to how the SNP, otherwise known as the Scottish National Party, as far as the direction of Brexit moving forward in the year 2020. So interesting stuff. We'll see what happens. It's not a lot to go on there, but it's also something to think about. These things are important. At least we know that this is more of a long-term variable. So we'll probably be talking about that next week after we have the Thanksgiving holiday and stuff like that, and have a weekend to absorb everything. All right, now with that, let's take a look at the Australian dollar, US dollar. This one's been a tough one. The China trade deal has definitely been something that's hurt the Australians as well as the Australian dollar currency for over a year now. Now, the funny thing is that in this little bearish slump, it's settled down too in this quiet little range trade. So I think it's really hinging on the trade deal because there's all this expectations that we're going to probably reach something over the next week or so, at least a break for the Christmas holiday, some sort of relief in the deal, not necessarily picking a direction as to how things are going to go. But last year it happened, and everyone's, I guess, not planning on it, but hoping that it does once again and give a little spark to the economy and whatever in certain other places around the world. Who knows what will happen? We shall see. I think that this is definitely proof in the pudding that a country like Australia, that's also a continent, shouldn't put all its eggs in one basket like China, and that's a problem. And hopefully that they are learning the error of their ways and starting to readjust and come off that one line road. Otherwise, they should realize that eventually it's going to be a low road that leads to then the Chinese are coming for them. So I think they should diversify, and then they don't have to worry about these little trade deals and stuff. They would have other trading partners and delivery partners to utilize. But then also we'll see as the shift in manufacturing goes in Asia, maybe that will also force Australia to start delivering towards other countries because of the demand that will be there. Very interesting things. 2020 is sure we will not be a year to disappoint as far as the geopolitical spectrum is going on. Just think about that. We have Brexit for 2020. Here's my prediction of what we will be dealing with in 2020, folks. We will be dealing with Brexit. Not a hard one to predict there. So I thought that last year that I figured it would drag in through this year, but I was hoping they would have resolved it by this time, which I thought would happen, or at least to a better degree than it is. I thought they would have at least done the Brexit and then figured out the trade stuff as they go along, which would just make common sense. But then we're dealing, see, when adults are like children, you will get childish actions, right? So let's go to New Zealand dollar, US dollar chart here. This is kind of looking positive and bullish, but running out of steam. Big neutral trade over the last week and a half, especially the past trading week as we head into the holiday here. So there's not much to go on here, folks. So if you're a bull or a bear, all I can say is if you're a bull, keep your stops tight. And if you're a bear, I'd be very careful because you're butting up against these highs and flirting with this one. But then also, we've had a nice rally here, obviously a bull trend. We've had this higher move high, higher move low. But now if this is becoming a lower move high, perhaps we're going to have a consolidation to lower trading phase. And let's put a trend line here also. The trend has been held up pretty well for the last couple months. So there's a lot more to go to the downside here. So maybe we get a test down of the support line over the next month as we head into the last part of the fourth quarter as we also start to wind down 2019. So for the New Zealand dollar, US dollar, we really don't have very much to look at or talk about. Same with the Australian dollar, US dollar. But for the US dollar JPY, let's take a look at that as it's buttoned up against resistance. It was very strong about an hour ago, but now remember we have the US markets waning and look at this. This is the vacuum kind of moves that I talk about, folks. We're in holiday markets, volume's thin, and look at this. We have the US dollar yens in play when there's no numbers, no reason for anything. Unless there's something going on with the trade, there must be very positive vibes on the trade talk going into the holiday. That's the only thing I can see why with the bullish momentum that's going on here. But look at this. This is creeping right below that high. Maybe we're going to get out, and then the U.S. markets are going to close, and the currencies are going to go haywire once that happens. It could happen. I wouldn't count on it, but anything can happen when you watch the markets and trade the markets. That's for sure. You learn that over time. So let's go back to the British pound, US dollar once again. This thing is a sleeping, creeping little market that you just want to, I think that you should wait until after today's, I guess, expected announcement and see what kind of reaction that we get off of there. And then, like I said, you have just like the Euro US dollar, you have these breakout points that can help you out as far as direction. Now, before you start to get all crazy, let's say we have an upside breakout here of $1.2987. My expectation, like my expected likelihood of a rally would most likely run out of gas around a buck 31, a buck 31 half. So you're not looking for a major explosive rally. I don't think you're going to get a move like this when it went from a buck 22 to a buck 29. A seven handle move that, not that it couldn't happen, especially after basing like this. It's just that I don't know what would fuel that unless, for instance, this announcement today, if it gets confirmed, is that aggressively bullish. I just don't see how that is unless it's a sign that a Brexit deal, like it or not, will occur next year, which I think the whole world would be happy because then afterwards we wouldn't hear Brexit anymore. We just hear about trade talks between the UK and the EU. So, which that in itself sounds so ridiculous too. It's like a trade talk between Hawaii and California, as far as I'm concerned. Just get along. What's the big deal? Except for like your legal system and stuff. I get that, the sovereignty, but as far as trade, like really, come on. They've been dealing with each other for a couple thousand years and have gotten along well for the past almost 100 years now. So let's right? Let's figure stuff out. So with that being said, waiting for a breakout here. And now let's go at the US dollar Swiss once again. Now I think this might be one of your markets to really watch, because let's say that the yen, US dollar yen, does make that breakout. And let's say that the Euro US dollar, which we'll look at again, really starts to hit support. Right now, we're right there, just below parity. Maybe we close above parity. I mean, let's get this chart out here. Okay, what is the one thing that we have as a commonality here? We have, let's see, let's put this right here. It's basically parity here. So let's change this. Let's make it so you can see this really clearly, and everyone's going to know what we're talking about here. So let's zero out this. Now, parity is a psychological number. Now, it also does have a significant number as far as a level on all kinds of other reasons. But as far as for the most part, it is a big psychological level. Let's look at parity. Let's see. We go back to June. We fell below parity. Let's see. Actually, go back. Yeah, that's right. Okay, so June, May. That's right. So back in May, we were above parity, where we did manage to get a run up from April. But we breached parity, and we floated up there, and for a month and a half, we held above it. That was it. This was also coming off of something where it had been basing and pretty much riding parity, trying to truly maintain an uptrend. This is not the same case. After it fell below parity, the market's basically been in a sideways to lower market. Every time we made a run at parity, see here we fell below it and we stayed below it for a long time. Here we started to get towards it, boom, we got rejected, and that's here we are once again. So are we going to stay above it, and are we going to get above it? Could we pop above it? Absolutely, sure we could. Look at the way it spiked here. Especially over these holiday markets, it would not be out of the realm of possibility to see the US dollar Swiss pop above parity, stay above parity, and just keep poking around this little area here. Maybe even get as high as a buck parity 00 half or something like that. Is there much room for more? Most likely not. Now, this would be this indication of, is the dollar index really strong? Is the dollar strong? And are these trends solid? Right now, we're either at an inflection point where we're going to come off of and then go back to a neutral to lower trade for a little bit, or we're going to accelerate the trend. It's holiday markets. It's really difficult to figure out what kind of trading is really going on right now, because it's more likely more machines and people who shouldn't really be bothering with trading these markets because they're thin and irrational right now. So that being said, we have this market here pressing these highs. Now, if this gets rejected and starts to come back like here, could that mean that we're just going to be neutral and then make another run at parity? Absolutely, it could. More than likely, though, if the dollar index starts to take a turn from rejection here and those other currencies do as well, meaning the US dollar yen doesn't press those highs anymore and starts to come back, and also the euro US dollar, what if that rebounds as well? So the euro US dollar and the US dollar Swiss, keep watching those. Right now, obviously, they're pressing the limits, and we'll see that where the euro US dollar is now here. It's a little bit off its lows. It needs to make those lows. Now this is significant. Let's say today the markets close, the US markets close at noon, the currencies close later on, there's cash markets, or will they roll over rather, excuse me, for the next trading day. Could we make new lows tomorrow and then Friday? Absolutely we could. But here's a big interesting point. What if we don't? If we don't, and we start, this market starts to pull back to a buck 10 half and gets back up towards 111 even over the next, say, week as we go into December, well, then that's probably a sign, and this is something you really need to pay attention to, is that if even if the bears start to hammer support, the likelihood is it's more going to be just a grind of a trade, slowly bouncing around here, and not giving much action for traders over the next month. However, if you start to get back up to the upside, and let's put this trend line in here, we can put this like this. It's not that hard for us to get from, we're right here at a buck 10 to above a buck 11 to a buck 11 half. We could very easily be in those areas, especially if we take out this high at a buck 11. We get back above $1.11 even, the likelihood of us continuing to try and pressure a rally up back up towards $1.12 area becomes a very, very, very viable possibility. Is it going to happen for sure? Who knows? But the way the swings are, if you were to do that, then that would mean, especially if we don't take out this low here, well, that means that we will have pretty much established support here, giving us a really good chance of breaching resistance and getting the euro US dollar back up towards this 112 half, 112 even area. That's not a big move, but the way this, since the average true range for the euro US dollar has been probably something more like only 40 pips for the past couple months, that's a pretty good move. The way this market used to trade, especially with the average true range, it would be more like 60, 70 pips a day at least. You would be able to typically hit that kind of a move literally within a day. So if we're to go right now from where it's at and be at 111, 111 half, that would be like something within like an hour or something like that, even an hour and a half, something like that. That would not be out of the realm of possibility. Could happen still once again, but right now it just seems like the euro US dollar is not acting like that. So with that being said, we don't really have any other real signals to work with, but we do have something I think you really should take a look at also as we complete this webinar today. So we don't have any signals but until the end of this month. So guess what? We have weekend obviously coming up on Friday. We have month end coming up too, because on Tuesday, or excuse me, on Monday when we return to the markets, or Sunday night, it's already December, which means we're in the last month of the year, last month of the quarter, and a new week. So we will possibly have some weekly and monthly signals that arise by Friday. So here we have Dixie, which has been pressuring resistance, had a little trouble yesterday, and now it is back. It's a little bit higher as we are speaking right now. And let's pull up the monthly. Now this is pretty important, folks, because the Dixie, the dollar index here, see how in October it had this big red line? That's called a bearish engulfing line. Okay, that right there is a sell signal. Now we had a nice little bounce back. The dollar's been not necessarily strong, but it has come back over the course of November. But look at that, it's failed to really get to the 50% mark. So this is a good area where, like I said, we are either at this inflection point where the dollar index, because we have the sell signal and because it looks like it's time to lean on support, this would be where if it was a profit-taking momentum type of correction right now going on with the dollar index, then we would probably see that somewhere between now and Monday, the dollar start to turn south and then trend lower, probably for the next like 2 to 3 weeks, maybe even more. That's one scenario. Anything can obviously happen. We'll have to see how things settle out by Friday. But I would be very cautious that if the dollar index, unless it has a major move to the upside over the next few sessions, and into Monday, then I think that this sell signal is valid. The month of November has been a bit of a grind as the bears get a little bit of a corrective profit taking move, and the bulls try and get some momentum going. But I think the bulls might start to actually be in a lot of world of pain coming up after next week. So we'll see. We have these markets that are at these hinging points, and we have a big head and shoulders forming in the dollar index here. So if that does occur, and if December starts to trade lower as we move in towards 2020, then we may see the beginning of the new trend where you can pretty much look to sell rallies in the dollar for probably a few months to maybe even a couple of years. Remember, we're coming into an election year in the U.S. We are also coming into an impeachment process and trial that begins in January as well. So the dollar, I don't know how much the dollar does or doesn't like the president or what it cares about the presidency, but if it doesn't like impeachment trials and things like that, as well as other things, then who knows, we may start to see a turn, which would give a natural lift to those other currencies that we were talking about. So with that being said, we want to switch to one last little screen here. And if you want to learn about that sell signal in the dollar index, which also these signals work in all kinds of markets, all Forex markets, options markets, stock markets, futures markets, you can read a book. It's called High Probable Japanese Candlestick Patterns, available on Amazon.com, and it's available on paperback and Kindle. And we have a Black Friday sale that is going on that begins on Friday and lasts through December 5th, where you can get a discount on the paperback book, 50% off. And if you're Kindle Unlimited, you can read it anytime, by the page. You don't have to buy the book. So that's also another option for those of you. A lot of people have that kind of Amazon account. So check it out. It's a very interesting book. It has lots of good methodologies as far as how to apply money management and other types of things and systems and patterns to even your own systems. So, and it also helps to demystify the error about Japanese candlestick patterns and how to use them. Most people use them incorrectly or have not learned how to use them in a functional manner, or believe in them in a way, think they are used in a way that they're just completely not. So read the book, you'll learn all kinds of things and be like, oh, now I understand why candlesticks didn't work for me, or at least you'll know why they didn't work for you, that's for sure. So with that being said, you have a happy Thanksgiving, safe holiday. We look forward to bringing you more content. Please like, follow, and share us all over the place on Twitch and LinkedIn, and check us out at www.forex-trading-unlocked.com every day to see what's going on.